So I recently left Cisco to pursue full-time angel investing. Moved out here when I was 23 to chase that Silicon Valley dream. Join a startup, take it to IPO, and was fortunate able to do that at Okta and OpenDNS. Share with you, hey, this is what I'm doing. These are the trends. A lot of people don't really see how to invest in it from a public market, secondary offering, VC, or angel investing. And I just want to be a resource to everyone here. And then also, if you like, you can be my limited partner without putting any capital. I'll just send you deal flow. And if you want to co-invest with me, you can, right? It's a very irresistible offer. University Summit. So it's this annual event where I loved it. It was a huge event and it was very inspirational. And to summarize, the trends that he was sharing with videos, with speakers, with people who are sponsoring the event, I'll quickly walk through a couple of the key items here and just briefly mention, what are some interesting takeaways that I got from the event. A big core focus is artificial intelligence, and that really means taking data and using a way to finding a way to basically automate through machine learning, or moving towards creating that supercomputer that can do everything. That is becoming more and more prevalent, and I'm also seeing it here in startups as well. There's a lot more startups using, I wouldn't say AI, but they were using data and using machine learning to enhance a lot of the functionality. So more and more, there's a trend that the belief is we're going to eventually become like this pseudo-human, where we will have technology powers on top of just embedded into us, which I thought was pretty interesting as a future prediction. There's also AR, VR. I think the biggest explosion of AR, augmented reality, is Pokemon Go. So like having a dashboard, as well as the trends of actually an actual expression of virtual world in the physical world, and then of course VR as well. I think the biggest takeaway there is, I went to a breakout session, and the consensus was the best way to kind of invest, if they were an investor, is the enterprise space. So where companies are using AR or VR for training, or for helping, creating manuals to help employees solve problems that normally require paper and pen. There's also the movement of autonomous vehicles. There's a lot of talks around how parking is going to be disruptive, how eventually everything is going to, a lot of jobs are going to be lost through that. Blockchain, there actually wasn't that much talk about blockchain other than the Facebook Libra project. How Facebook is going to be a really big player because they have all the identities to provide a digital currency that could cross borders. Data science is huge. A lot of startups are getting acquired or going public. Salesforce bought Tableau. And then there's Looker acquisition. So there's a lot of startups going in the data space. So data is the new oil. That's kind of like a consensus theme as well. And then there's also conversations around biotech. So the idea of longevity, more and more investments for us to become, to live longer, and using stem cells and all that good stuff. And then there was brief mentions of Internet Things, 3D printing. So I think the idea here is, more and more manufacturing costs can be saved by 3D printing it on demand versus having it, shipped all the way out from a manufacturer in China. There's gonna be a lot of cost savings from these companies leveraging 3D printing. And then of course, robotics, ranging from just how our life is going to be more technology, tied together to robotics. Jobs will become automated, but the trend overall is very optimistic. I think some of the key things that aren't on here is inspiration, that an optimistic look of the future, capital abundance, where there's going to be tons of money to fund these different projects, and that's going to create more and more abundance and wealth for the people who are investing in it. At this early stage. And there's also, talks about how this technology is going to help lift people out of different poverty. And actually, it's more of an optimistic approach. And I was left feeling very inspired and super pumped about the future and super pumped about being here in Silicon Valley. So these were the kind of key trends in a nutshell. You can always, go on YouTube and, check out more on Singularity University's webpage. But I at least wanted to summarize some of the key things that I personally learned from the event and share that with you all. One thing that, as a software guy, that wasn't really mentioned too much, and why I thought, hey, it'd be interesting to have this little webinar with everybody here, is the trend that software is eating up the world. And this is a quote by Mark Andreessen. He's the co-founder or founder of Netscape, and then now partner at Andreessen Horowitz. So that's the Andreessen, the A and A16Z. And that was a quote that he had, very, very, very early on in his VC career. And I really think about that a lot in the terms of my investment thesis and how, just how software is going to eat up everything in the sense that it's going to be embedded in our world. And that's one of the key trends I think that wasn't emphasized a lot very well. I mean, not very well, but it wasn't emphasized here. But in reality, it's all tied together. It's all, there's going to be, I think the big trend I see is there's going to be a combination of trends. You're going to see AI within autonomous vehicles. You're going to see data within VR. I mean, the consensus is they're going to be more intercorrelated than ever before. And investing in technology that doesn't have, some of these things, you might be outcompeted in the next decade or so. And when it comes to investing, I think it's important to think about, what are you really funding? Because I think a lot of times when I saw some of the presentations, I realized a lot of people who are investing in this space are actually, especially wealthy people who really don't need the capital. They're really looking at impact investing. How can I, go to the moon, right? It's not, I wouldn't say that it's just a different kind of approach, or solving clean energy, or like there's different types of investing. And I want to share that, hey, like a trend I see is there is impact investing, where there's wealthy individuals who are looking to their thesis is really to better the humanity and helping the world in a better place, like clean energy. There's definitely, like in the biotech space, I think in that space, what are you really funding? You're funding the research and development of these ideas in hopes that, it's going to take off, and hopes that there's another investor to follow on afterwards. In the software space, a couple of folks on the call today mentioned they want to start doing more software development. Are you as an investor at the seed level investing in just people developing software? And then, are you investing in a scaling of business? Are there existing traction? Is the capital really to expand the customer acquisition? The product market fit's already there. And then, in the public markets, are you just buying ownership of an existing growing business, right? So I just think of this like, in the business mastery, we learn, what business are you in, but what business are you really in, and what business do you need to be in? I thought this was a very relevant slide to like, what are you really investing in? What are you really funding in? Because a lot of times it could be unclear if there's that idea that's just like, wow, this is an amazing idea. So it's really important to take a step back and really think through what stage are you really investing in investment, because that really determines a lot of the risk in investing. So now I'm going to talk through top down, how, if you want to invest in these emerging technologies in the public markets, to the venture market, to secondary offerings, to angel investing. And I'm just going to go through all that very quickly. And a great speech I heard at the event was the ARC organization. So ARC is a fund manager who they basically created ETFs, so low cost indexed public equity stocks that they believe are in alignment with a lot of the exponential technologies that was previously mentioned. So the main innovation ETF is the ARC Holdings, and you'll see here they really are bullish on Tesla, electronic vehicles, autonomous vehicles, energy. They bought Solar City, right? So I can see why they explain. I mean, they're basically explaining all the different trends that they see, and then their portfolio is going to reflect that. So you see Square is like their fintech back, and also crypto back. Square got into the crypto space. You see here they have CRISPR. There's definitely a lot of talks about CRISPR and biotech. So there's a lot of therapeutic, medicine-based companies in their portfolio. Then you have the enterprise company, Splunk. They do analytics, so that's a data play. The Lending Tree, that's fintech play. Real estate, that's another fintech real estate play, and then Lending Club as well. And then NVIDIA, I highlight this because another plat shared with me this 2 years ago, how NVIDIA chips are the key chips in blockchain mining, in artificial intelligence. So I really think NVIDIA is a really interesting, company in this ETF. And then you have, of course, big Salesforce, big software company out here in San Francisco, Twitter as well. That's a communications, a social media play, right? And then more and more different types of asset classes here. So I thought this was really interesting. This is one of my favorite speeches because it allows folks who may not want to do the risky investment class and really look at investing in this index. So I also pulled here the ETF of ARK that I just mentioned and looked at it from a 1 year period and in comparison to the green, which is the S&P, right? So in the past year, right now it's at, underperforming the S&P. If you rewind the clock back 2 years, it's overperforming the S&P by about 10%. And then let's say a typical venture hold 5 years back, you're essentially doubling your money with this allocation. So I thought this was really interesting. I just wanted to share this because, it's a great way to get exposure to these emerging technologies in your portfolio and have liquidity. And I learned this at, Peter's event, which, really grateful for. All right, so let's go backwards, right? So we talked about, in the public markets, we're going to skip the IPO piece. And then, if I was a betting man, I think, my background, Okta, Slack, Cloudera, OpenDNS, like these are 4 companies that, my wife and I were able to be a part of pre-IPO. And, if I was a betting man and I had an unlimited amount of capital, right, and access to deals, I personally would invest in these stages right here because a lot of the risk is already taken off. The product market fit is already taken off. And you just need to put money to grow the company. And there's still a lot of upside. So that's what, personally, if I had that, I would absolutely do that. Now, and that's how, this whole world of venture capital, like this is exactly what they do. But the real, one thing I want to over communicate what I've learned here is you need access. You need access to, if you want to get to the top funds, and this is a real, fun research of all the different performing VC funds. There's a lot of money, like, that capital abundance that Peter was talking about funding these new technologies is there. Like there's a ton of capital in this space. The problem is most of the returns are really going to the best fund managers in this asset class. So even though it says return more than 3x, I mean, we're talking about, Andreessen is going to be, it's be an incredible rate of return that they've been able to produce. But you need access, and you also need to be able to write 7-figure checks. So a lot of folks who are watching this probably don't have, that kind of access or the capital, and you also, the returns can be subpar. And then also, 220, you're paying, management fees, and you're really betting on the fund manager. So that's kind of like venture capital in a nutshell, without going into very, very much detail. Are there any questions before I continue? Anything, any questions? I always like to pause because I've been speaking for a while. This is interesting.
Yeah, Irwin, someone presented me an idea for like a CBD marketplace, but they had no revenue, just an idea. And I had the same thought. I was like, well, let someone else do the seed round. If it works, then I'll come in on Series A. And so that's kind of what you're saying is kind of the better way to do it. Why do I want to take all the risk? I'll still get all the upside in Series A or even B when someone else does all the risk with the seed round.
I love that you chimed in there. Okay, so let's keep going, and all questions or all answers will be revealed. So this is by design. All right, okay. So the next stage behind that is the secondary offerings. What are secondary offerings? An employee wants to sell some of the shares, or maybe the founder wants to sell some of his shares, and doesn't want to raise another round of financing. Here are this is my personal watch list. These are the companies that I'm watching for that if these personal shares ever come out. What they usually do is they list it to a broker or a marketplace like EquityZen. It's my favorite one. It's pretty well vetted, pretty solid. You're not going to get scammed. They do very good due diligence, and you have the opportunity to buy shares at maybe a discount or maybe at a premium of these different companies. And this, if you want to screenshot this is my personal. If I was a betting man, what I think the money is for the Series B and beyond stages. Here are my bets personally that I'm watching, to snap up these shares. This is what we call growth investing, where it's a later stage. You're not going to get the 100x, 10x. Well, you might get a 10x return, but you're probably not going to get the 100, 1000x return. And you more likely will get a 1x to 6x kind of range at this stage, where these companies are already, in the billions of dollars in valuation, and you're hoping it doubles, triples, or quadruples. So I just want to mention that EquityZen is pretty interesting. I think on EquityZen, you actually could have bought Slack shares, a year or 2 years ago for $11 a share. So right now, even though it's down 50%, you're still up, 100% on your money. So that's another thing that I don't think people realize that you can actually bet on is the secondary offerings and buy shares from existing employees. And it's a pretty powerful place because you can basically cherry pick some of the hottest startups in the Valley or the world and make really good returns. So that's my 2 cents. Let me know if there's any questions around that. Happy to discuss that further. And then of course here, you can also pick exactly what you're looking for. 3D printing, 3D technology, all the different trends that we were talking about. You can find more mature companies to buy shares into. All right, so now let's go to the seed and angel investing. So angel investing is an asset class that has a set downside and a ridiculous unlimited upside. And we'll actually go through a couple of examples as well from real people who made, real angel investments. And I also want to kind of share a little bit of a story. So how did this all, or I guess, what am I doing right now, right? So my personal mission is to help founders impact the world. I had a chance to, just really do that for my previous founders, and I really enjoy helping founders, and then also provide investors access to these different types of deals with amazing returns. So who am I learning from, or how did I get inspired is actually probably a better way I should frame this. I picked up Jason's book when he first launched it. It's How to Invest in Technology Startups, timeless advice from an angel investor who literally turned $100,000 into $100 million. I mean, that's insane, right? That is insane. There's no asset class that can do this unless, I think crypto counts as well. But so he invested in his career. He's been able to do the very first angel seed check into 6 different unicorns. So these are 6 different companies that have been able to value at over $1 billion, and 3 of which are the most popular, I guess, name recognition. You have Uber, you have Robinhood, which is like millennial brokerage without fees, and then you have a calm meditation app, right? I read his book, was inspired. Anyways, went to his event, got to get in proximity to a lot of other angel investors, and really was inspired by, I think one concept that I was left with was, if you put money in real estate and the bonds, that's great, and it's going to grow. But in a way, it's not going to change the world. It's not going to really fund the innovation of humanity. It's just like what Jason likes to say. It's kind of dead money. It's money that are just sitting in your portfolio, and it's just sitting there growing, which is great. But again, I think what I thought about that was, hey, there's this huge innovation that's happening. Why not be a part of it versus be on the sidelines of it? That led to meeting Tom Williams. Tom is a lead investor on Angels List, which is another crowdfunding platform, kind of like EquityZen, but more for angel investments. And we can talk a little bit about that as well. And him and I, he's become a mentor and a partner in my next step in my career. And he taught me a lot. So just one quick deal about what he's done. he's been able to find this, the founder of Grove Collaborative, write the seed check, and then follow on with his investors from Series A all the way to Series D. And he's raising, millions and millions of dollars with his investors throughout all the stages, from seed all the way to Series D. And, it's one of his really interesting success stories as well. And also who I'm working with. So let's talk a little bit about a quick story of two different angels, because I think it's relevant to Anand's question about, that angel, that idea stage. So here's two stories of two people I personally know really well. Angel one wrote a $100,000 check for these two folks who work at Google, and they were working on a business, and it was a fintech project. And that's when he wrote the check, right? Then that progressed into the founder pivoting his business to a e-commerce, it's probably misspelled, e-commerce marketplace. They were able to raise a 12 million Series A from a venture capital fund, a very top tier one. I don't want to really mention it to give it away. And then they were ultimately acquired by eBay. But guess what? The angel made $0 from that deal, because that acquisition was probably less than how much was raised from the VC. So they're, even with these really good signals, angel investing is extremely risky, right? So angel number two, this person's wrote a $10,000 check to a second-time founder. It was for an iPhone Android app, and that founder changed the business model from a one-time purchase. So usually when you buy an iPhone app, it's 99 cents or $9.99 to a subscription model. And since then, that they have raised a 27 million Series A, 100 million Series B, and most recently the valuation is 1.1 billion. So that startup is the Calm meditation app, and my friend now has 120x his investment. So that $10,000 check is now on paper worth $1.2 million, which is insane, right? It's absolutely insane. And they were able to sell off some of their shares to get his capital back on the secondary markets during these raises as well. So I just share that with you because, there's a couple of reasons. One, it just shows the risk of angel investing, but also the potential upside as well. And also I want to highlight the bet sizing, like $100,000 check versus a $10,000 check, which is a pretty big, key thing in this business. All right. So back to Anand's question. I think this chart will really help break down and answer a lot of questions for everybody, which is, in the angel world, there is people who have ideas, right? And a couple of you folks mentioned you guys have ideas. That's great. And then you start mocking it up with pictures of what it would look like. And then you may invest in development, and you actually have a minimum viable product. And then you get people to use the product. So you have unpaid customers. So these are unpaid pilots. And then you move to paid pilots, converting those pilots into paid pilots. And then you move into now a reoccurring business model where you're getting customers and they're paying for your solution. And you're seeing here at the stages, you have friends and family, you have angels, then you have syndicates and seed funds, and then you have venture funds, right? So it increases with sophistication as you go down the stack. And I like to think that if you're an angel investor, the sweet spot is in this green zone. You're going to probably pay more for the valuation in Silicon Valley startups versus non-Silicon Valley startups. So a company that has revenue is probably going to ask for anywhere between 10 to 15 to $20 million in valuation, even though they only maybe have a few tens of thousands of dollars a month on revenue, versus a non-Silicon Valley startup. So this matrix in my world has really cleared up a lot of my investment thesis, where I don't want to invest anywhere here because there's a lot of risk unless that person is a famous founder. If Mark Zuckerberg left Facebook to go start another company, I'll give him a blind check, 100%, because I just know that guy will execute and he can take an idea to here very quickly, right? And I'll pay a premium to do that. So that's one thing to consider when you're looking at deals from friends and family, and kind of do you trust that they can execute? Because that's that's a really big part of the, of investing in, these different folks. So want to pause for a second. Would love to hear what your thoughts are. Any questions? Is this helpful?
So I'll chime in just because I'm looking at your chart here, and as I mentioned, I'm out of Texas. Do you have any thoughts or recommendations on improving, my value proposition in any kind of transference of the company, or the beginning maybe launch to Silicon Valley area, or maybe kind of getting together with people in the Valley?
Yeah. So in my opinion, if you're not a tech guy, you need to partner and find your technical co-founder and sell them on the dream and have them come on board with you. If you're not a technical co-founder, like a lot of folks will not in my business will not invest without a technical co-founder, because they realize, at the end of the day, it's an execution game. And what's to say that another, nerd, geek, whatever, hears about your idea and you're getting traction, or they're addressing your same market and they're just able to out execute you. You need that strong team before sophisticated investors are really even going to entertain writing you a check. I'm going to be perfectly frank with you, Brayson.
Yeah. No, I appreciate it. So a technical co-founder.
Oh,
ideally
definitely.
Out of the Valley, that adds.
Well, the Valley's not a thing. I think, you just need that smart person.
Regardless.
I think what makes the Valley different is there's a lot of smart people here that are chasing their dreams, and you can meet that technical co-founder easier, and then you can hire the right technical talent easier, but it's also going to cost you quite a bit more than, let's say, Austin. But there's a lot of mini Silicon Valleys that are popping up through the country, like RTP, Austin, Southern California, Santa Monica, right? New York. So it's not exclusive. It's just, you're also going to be raising at a lower valuation for sure.
Okay. Thank you.
All right.
Irwin, can I piggyback on that question?
Absolutely.
So with that as well, I live in the Raleigh RTP area actually.
Yep.
And so what do you go about to find, like, what are you looking for when you're saying technical co-founder? There's a lot of universities there with a lot of smart kids there, as well, that probably know a lot. That know way more than I do on that kind of stuff. But what are you kind of looking for? How do you find those people?
I love it. All right. So my investment thesis is simply like, I'm learning from really, really smart people like Jason and Tom. And this is what I look for in all, before I even get to the idea, before I get to the TAM, the total addressable market, is I'm looking for that person, that individual that has that quality where they have a big vision, they are highly organized, they're highly driven, and they're highly able to recruit and lead. Because at the end of the day, at this stage, you're really betting on the individual. You're betting on that future, Elon Musk, right? You're betting on them to just take an idea and go find and break through walls and run through it. And when I'm doing angel investing, I'm looking, is that, because I've been able to experience what it's like to go to an early startup like Okta, the Series B, and ride that, to a very, late stage before the IPO. And I got to work closely with these CEOs, and I understand why this thesis is what Tom is looking for. It's because you need to have that person who can not only, mock up the idea, get the, hire the people to, create the solution. Then you need to get the customers. You need to hire the sales team that lead the sales team. Then you need to hire the marketing and then the customer success. It's a you're looking for a CEO, a future CEO of a company. That's the only way you're going to be able to find these startups that actually can become billion-dollar companies, in my personal opinion. And they don't look all the same, right? I think Mark is a great example of that. He was not the ideal looking CEO, but he became that person. He still is that CEO today, and he had to grow into that role. But that is my thing. Like, when I look at angel investing in the founders, is like, can that person execute and take my money, and it's not going to just go to him learning the lessons off of my paycheck, right? That's the core thing I look for before I even get into the actual technology itself.
Okay.
Which is why personally, I don't like when I had to, look inside my life and look at my skill sets, I realized that I'm not that guy. I am not that CEO, and my money is better spent investing in founders who are way better than me. And that's why I'm doing what I'm doing right now, is I believe that these people are going to change the world, and I can be an investor advisor and help them. And I believe that they're going to be able to out execute me. But I can also have, control my destiny by offering my advice. Okay, so here's my investment thesis. So beyond, like, let's assume we check off the founder page, right? What does Irwin look for personally? And Tom and I are pretty similar in this approach where, during a gold rush, the good time is to be in the picks and shovels business. Like, the people who made the most money in the gold rush were Levi's and the people who were selling picks and shovels and hotels, accommodation and food. Like, that was who really made the bank, was really servicing this gold rush. So my personal bullseye and what I look for is the software that's going to be running all these different types of, healthcare, enterprise, IT, fintech. Hold on a second. Person on mute. Yeah. All right. And then also I look for software companies or software that's going to be able to sell to the largest customers in the world. Because if you can solve the biggest problems, which is the big corporations, the Fortune 500 companies, that will result in a big contract price. And then you can hire expensive sales reps like myself to go sell that software. And then you have a really good chance in building a very large, really sweet reoccurring revenue business. And then, go to IPO or get acquired for a very high multiple. And then also another key trend that I personally investing in is cybersecurity. I believe that this is a sector that will always grow exponentially as we can become more digitized, and all these trends that was mentioned earlier in the conversation, you need to secure it. And this has been my sector, right? OpenDNS, Okta, they were both cybersecurity, enterprise software as a service. Like, I'm just kind of following what I know. And it's a very picks and shovels business. It's not a sexy, it's not going to be an Uber, right? Nobody knows who, Twilio is, unless you guys might actually know who Twilio is. But, those kind of picks and shovels businesses make a lot of money, but they're actually kind of boring. If you actually explain it to somebody, it's not really exciting, but it's, I like to think of this model. And I'll explain one more thing why I like, in the story about how we transitioned from on-premise software to subscription software. So I think this is good advice if you guys are starting a company. Depending on what you are doing, if you're a marketplace, that's different. But if you're selling a piece of software that is, so what I'm doing is I'm following the model of, Jason and Tom. What they do is they not only invest their own money, but they also have a very interesting approach called syndication. What that means is it's a lot like having a fundless fund model, where they find the founder, they find the ideas, and then they just share it with their LP base. And their LP, the limited partners, just choose to invest whatever amount they feel comfortable in the deal. And they only pay 20% carry if the investment goes well. So instead of doing a 220 model where, there's VCs making millions of dollars off of just fees alone, this aligns directly with the limited partner, where they're just finding the deal flow and, they're investing their own money, but they're also allowing other limited partners to invest deal by deal with them. And that's the business I'm getting into, right? So with Tom, he has the family office connection, and he has the ability to deliver, a month's amount of capital. So I don't have to worry about that anymore. I'm just focused on finding the entrepreneurs, bringing the deals to Tom, and then he funds the deals through his LP base, and then we're good. So I'm basically like a venture partner without a fund. So that's essentially what I do in a nutshell. Is I find great founders to invest in. This is actually why I also want to share this webinar. It's like, hey, if you guys know anybody who are great founders, I would love to meet them. That's the real business that I'm in, is helping founders and finding them early before the venture capitalists do. So I'm really focused on this stage right here. So less on the idea, more, you know, in the MVP and beyond, kind of what we talked about. And then I'm also investing in the Series A stage right before it starts really taking off as well. So here are some real deals that I personally invested in. And you're going to see a lot of the names I mentioned before. So this startup came from Jason. So I'm in Jason's syndicate. This is a deal that I'm really bullish on. It's a B2B SaaS CRM for influencer marketing. So what they do is they sell their software to big direct-to-consumer brands that have big Shopify spends. And that platform connects them to influencers directly, so they no longer have to work with the middleman, and get right in front of the influencer to post, you know, whatever it is marketing, and then they get direct ROI calculation of conversion from those influencer marketing posts to their actual Shopify sales. And you know, and they've had incredible growth. When Jason first syndicated the deal, it was $1 million in revenue at a seed stage, and now the valuation has doubled in 1 year to $3 million revenue. So the trends I like to see that aligns with this my thesis is, you know, depth of retail, direct to consumers blowing up, influencer marketing is blowing up. You know, they're servicing high revenue Shopify customers, so they're like the enterprise in that space. So the big brands doing big numbers, and they're disrupting the middleman by allowing brands to connect directly with the influencer. And there is a VC leading the round as well. So these trends, these signals is why I'm an investor in this company. And it's a SaaS-based, like pick and shovels, very boring company, but it's really servicing this trend that I believe is going to continue on for the next few decades. This is my first syndicated deal. I found this at this founder at a through my network, and it's a database security as a service startup. They both founders had 6 exits before. You know, not all of them were amazing, quite frankly. I mean, they weren't like, they haven't hit their grand slam quite yet, which is great because that means they're still hungry, right, to do this. And then the thesis here is every customer has databases, and everyone and more the big customers have distributed databases, and they don't really have a clear visibility and access controls to the actual data set. So it's a big market, big pain point. Like when you hear, you know, the Uber losing, or I mean, not Uber, but like a company losing millions of credentials, it's usually because of an access control where someone can actually download their data set, and no one was securing that. So how one of the co-founders actually partnered with Uber to build out this security in Uber's environment, and then they open sourced it and then used that technology and created the company for first principle. And one of the reasons why I invested in this deal is I, as a sales rep, I see that the problem that they're solving, it's going to be hard. Don't get me wrong. There's risk in the deal, but if they can solve this problem, customers are going to pay 6 to 7 figures for this solution. And that's a big, you know, that's a big opportunity. If you can sell those kind of big software checks, you can hire guys like myself to go sell into the deal, and you're going to raise really, really big venture capital checks as well to fund it. And when you have big problems that you can solve, I mean, these are billion dollar problems, right? So I invested the first check in. I syndicated this deal to my LP base and Tom's LP base as well. So, you know, Tom, the founder, he gave his thumbs ups too. So we both vetted the deal. This is a deal that I personally invested in and also syndicated, you know, about several 6 figures into. So, you know, again, why do I invest in this space? In enterprise SaaS, you know, Andreessen wrote a blog post about this. When they first started out in their business, they were focused on enterprise SaaS. And the reason being is when you can prove out a pain point, all you need is the sales and marketing team to scale it out. If you can solve a pain point in a big customer and has an actual solution that actually solves a problem and it can be repeatable, and it's a repeatable problem. So I see a path to 100 million. I can actually help and influence and do business development for them. And there's also a buyer at the other end. So like in the security space, it's super hot. There's like so many security companies like McAfee, Cisco, Symantec. There's always a buyer in the security space. Like the security stars getting snatched up all the time. And I think that there's liquidity for this type of solution. And VCs are willing to really fund. So the big thing about angel investing is, you know, when you make an investment, you need to see some sort of line that another person is going to fund the follow-arounds, because the reason why startups die is usually they don't have product market fit, or they run out of capital and they couldn't execute with that capital. And you're really betting on the fact that there's going to be a ton of money after you to help fund the deal to end, because quite frankly, our checks are not very large, right? So those are two examples where one I invested with Jason. The other one I did enterprise deal. So this is kind of like what my playbook that I'm focusing on. And then there's gonna be a couple moonshots where it's like gambling, where it probably won't work, but they have a chance, right? If that one chance might actually become like $10,000 to $1.2 million kind of situation. An example of this is like Contraline. I'm not in the biotech person, but when I saw this company, I was like, this is interesting. I'll put my money in there. It's a long-lasting reversible male contraceptive using hydrogel technology. So what they've done is instead of snipping the tubes for guys, they found a way to inject a gel that is reversible, that stops the sperm from actually getting out of the tubes. And they've successfully tested it in dogs. So it's basically male birth control without pills or any side effects, or at least current side effects. And let me asterisk that one. So this is like an example of a moonshot type of investment that I'm probably going to put money into, just because why not? It's like it's such a huge upside with no really, the downside is whatever I want to lose, right? So, and then here's, for you folks who are still listening to me, this is a deal that I have access to, working with a founder closely. Him and I actually went to high school together, and he's raising a Series A. I can actually help, folks who actually want to invest in this space and get into this deal at Bonsai at the Series A. And why I think it's a deal that I'm willing to present to everyone here, as long as you're a credit investor and you're willing to invest money that you're willing to lose. They already have a ton of customers. So there's a picks and shovels business. They already have 160 customers. A lot of them, like VMware, Microsoft, like these are big companies. They're not going anywhere, and they're definitely solving a pain point. And what Bonsai does in a nutshell is they provide automation of the events of the attendees going to their conferences. So Microsoft may have a conference, and their software is a plug and play that uses the data and the attendees from previous other companies and different data sets that they pulled, and help them drive attendance to these conferences, and basically eliminates the field marketing job or the job of an SDR to go invite people to go to these different conferences. So they're betting on the trend that more and more people are going to conferences, and also millennials are doing more experiential experiences, and they're going to move towards not just B2B tech. They're going to move into different conferences, like insurance conferences, real estate conferences, healthcare conferences, professional services conferences. So there's a huge opportunity to not only, address different pain points, different segments, because they've been, those 160 customers right now are just really information technology related conferences. So there's a big, market to go after. They have a solution that is working, it's repeatable, and you're getting at the Series A round, which is their first institutional raise. They started the company with only $150,000 in backing from friends and family. And I'll probably have to remove this, because this is really private information. But basically, like, this is their raise. They're raising, $3 million in capital. They only had to raise six figures, like a very small six figures, and they were able to produce millions of dollars in real revenue with real customers. And this is an opportunity that if you want to talk to me about, I'll probably, if you want, I can send you the deck and show you more detail. But that's the kind of, like, I think what I want to, the goal today was to really share with you, hey, this is what I'm doing. These are the trends. A lot of people don't really see how to invest in it from a public market, secondary offering, VC, or angel investing. And I just want to be a resource to everyone here. And then also, if you like, you can be my limited partner without putting any capital. I'll just send you deal flow. And if you want to co-invest with me, you can, right? It's a very irresistible offer. It's free deal flow. If you like it, great. If you don't, pass. It's no big deal. So that's kind of like, my quick update in a nutshell. Any questions? Are you guys still with me?
Yeah, I'm still here, Irwin, and I think that's a really awesome value proposition to just pass. I mean, it's very gracious of you to pass free deal flow to people with a just pass or I'll take it kind of option. So I appreciate that. I'd love to hear more.
Absolutely.
As too do I. Yeah. And I have so Joseph, you being on the line, and Irwin, you being on the line, I have a beverage company. So I want to know exactly what you did, Joseph, in that beverage industry piece. Along with Irwin, they are literally, they've had it to market before. They've had it in Costco. They've got sales orders, sales slips. It's at that next raise. So I want to chat with you on that because they have already got some alignments with like Corona and all these other vendors like 5 years down the line. So that's another avenue that I'm in right now that I'd love to chat with you about if that's the kind of stuff that I just saw in your little piece that you're looking to invest in. Yeah. And any of you guys on the line can invest in it. It's just simply, I just heard you, Irwin, saying that was something you may be interested in.
Well, I mean, I'm always looking for great founders doing great things. It doesn't sound like it's a technology company, but I'm more than happy to entertain, especially from the Plaid community, any deals. And I'm more than happy to, and if the right one comes out, I might be able to help you find financing for it, right? So that's another thing I'm helping founders do is help them raise their seed, their Series A. If I think if it's raisable. So I do look at there's different criteria. Would a VC actually take a meeting, right? And what would they think about it?
I am here's what I'll say. A couple of the other plats, I was going to send this partner because it's someone I'm coaching. Yeah. I was going to send him through Promise's learning process to learn about venture capital and the lingo and the language and all that and write the deck for him. And they were very interested in it. It's got, as you know, everything has got its timing. So I know there's some opportunity there. It's just a matter of if you're interested because it isn't tech-based, it's in the beverage industry base. My other one will be tech-based when I get the luggage industry piece, but that is it definitely in its infancy stage at this point.
Totally. Yeah. Absolutely. So what I'll do is I'll send an email out and, I have you, Anon, I remember you filled out the form. But hold on, let me stop the screen share for the time being and we can always just do a Q&A. Let me stop this real quick. Oh, shoot. I need to stop recording. Give me a second.